Hi everyone, my name is Alex. I'm the head of group strategy here at Better Collective. And we are here today to talk about strategy with our CEO and co-founder Jesper Søgaard. In particular, we will look at our vision and what it means to become the leading digital sports media group. Before we jump into that conversation, I quickly wanted to take the opportunity to actually define strategy or explain what we mean when we say strategy. So here at Better Collective, we see strategy as a continuously re-evaluated plan on how to further move towards our vision of becoming the leading digital sports media group. In other words, that means where to go, so our existing and new markets and geographies, as well as how to succeed in those areas. And I think it's important for us as Better Collective and all of us as colleagues to have a common understanding of what our strategy is, in particular what our vision is, so that we share the same goals, the same objectives, and we all know how our daily work relates to our strategy and vision. Hi Jesper, thanks for joining me here today and take the time to discuss and talk about our strategy here.
My pleasure, Alex. Good to see you here.
Thank you very much. So let's jump right into it. Let's start with a short recap. We launched our strategy, New Horizons, in the beginning of last year. So now that we are 1 year into that strategy, could you give us a quick recap on how the first year went and how satisfied you are with the progress?
Yeah, very happy to do so. I think if we start with, at least in my opinion, the most important part of New Horizons is sort of the vision of us being the leading digital sports media group. So I'll probably zoom in on that part, like how's the progress in terms of getting there. And then I want to start with the part where did we come from, because ultimately we are not making a significant shift to the strategy. We are basically just expanding and sort of having a natural evolution of the strategy. So what type of brands and assets do we have, and how are they developed in 2022, plus how's the full business done? And in my opinion, we have seen some progress on the profile of the brands that we own, definitely going in the direction of being true sports media brands and assets. If we start with the US, I think we have launched a lot of new features, podcast formats. We have seen revamps of the brand, so basically the content and look of our brands, Vegas Insider plus Action Network have definitely taken a position more of a sports media profile and brand. So on that front, I think we've seen in the States good progress. Looking to Europe, we have a very concrete example in Holland with Soccer News, where we did a revamp and that site has grown a lot. So for again the sports media profile, I think we are seeing progress. And on the business side, overall, you have just seen the updated financial performance on the back of Q4. The business has done really well, and fundamentally, we do need a solid and well-performing business in order to execute on this strategy, both from an investment point of view, but also from an M&A point of view. And I think if I should zoom in on one where we early on saw the acquisition of Futbin, which again I think is in line with the New Horizons strategy. We've also seen sort of a challenging market from an M&A perspective, both in terms of our own share price performance, which ultimately is also a currency for us, and in general very limited M&A being done last year. So there we've seen less developments, but again, M&A is timing, very timing depending. So I think it's something where we hopefully will see more action in the coming year and likely in the years to come. So the net of all of this, I think, is we are progressing. There's still a lot to do. It's starting with mostly the sports betting communities and media there, and then gradually expanding the profile for these media assets.
Sounds like we've had quite an eventful year.
Indeed.
Yeah, you mentioned a few times already our vision around becoming the leading digital sports media group. Could we maybe zoom in on that a little bit and put a few words to what that actually means? How do we define a digital sports media group? What does it mean for us as Better Collective?
I think it's an extremely relevant question, and in terms of definition of this, you can come up with different forms of definitions. And I have historically used the benchmark of how many visitors does ESPN have on their online platforms as a measure. But if we start with simply going word by word, leading is obviously an aspiration of us becoming the best globally. So it really sets a very ambitious direction for us. Digital is also basically us excluding being physical papers, being very land-based oriented. So it's more in the form of online brands, the podcast format. So hinting towards the kind of publications we'll do, which will all be online. Then for sports media, I think again we come from having spoken a lot about sports betting media. Now we are gradually expanding that arena, and we are expanding it with a lot because sports media is a very, very big consumption market in terms of media. So we are really increasing the playing field for the company. And I think that is the very exciting part of the vision, is that now the market will become much bigger for us. And sports media, even though it's that big, it's still niche. So we are staying true to a core and focus that have historically been in Better Collective. But still, it's much bigger than betting exclusively. So I think that all of that is creating this massive market opportunity for the company. And then the final part of group is a testament to the various individual businesses that make up Better Collective. So we have various brands in many markets that are brands in their own right, but under the umbrella of Better Collective, and that's what group refers to.
Better collectively, I guess.
Yeah, true.
Sounds like we're on a very exciting journey. Now I was wondering where this shift is coming from, or maybe to phrase it a bit differently, are we risking our successful legacy with let's say this very broad focus on the new industry, the digital sports media industry, compared to our legacy of affiliation? Is there a risk to kind of that shift, or is it going to be smooth from your perspective?
I think obviously there's an element of risk, or at least a challenge in the form of us needing to develop our capabilities within media production. Having that old affiliation tag to our business, which is where we started, and to define affiliation, to me it's a business model. Essentially it explains how we make money with the business. And if we go 10-15 years back with Better Collective, we had a very strict focus on attracting traffic and sending that traffic off to the sportsbook partners in order to generate revenue. That was in essence much more a clear affiliation definition to me. Whereas today, for most of our brands, the aim is actually to have an audience, grow an audience, retain that audience, so they will come back again and again to us. And ultimately, in my opinion, deliver a lot more value to the users, because they engage with our content, they engage with our brands, they are go-to brands for consumers. So we will deliver a lot of value. And coming back to the challenge part, well, that does require high quality content. It really requires us upping the content that we produce and the different formats that we produce. But it's not sort of us forgetting the legacy of affiliation, because it's a big part of the monetization that we will do today and in the future. So we are staying true to that part, that it's a very important revenue driver for the business, but we are expanding with the types of monetization models that we will apply. We have subscription already, we have traditional ad selling, CPM rates, we are developing ad technology, and we'll do more direct selling, have programmatic selling in place. So we are simply just broadening the scope, which again to me is reducing risk. This is about diversification, where we now will have less dependency on one traffic source by owning the loyalty of users. So again, going 10, 15 years back, we were highly dependent on Google for almost all of our traffic. That is not the case today. Google is still very important, but it's not the only source of traffic acquisition in Better Collective. So both on the revenue side and for the traffic side, we're reducing risk, in my opinion, by diversifying the business.
So now, we've talked about what it means to become a leading digital sports media group. We've talked a bit about where we are coming from and what lays ahead of us. Could you mention or point out a few focus areas that we are in right now, or that need to kind of be focused on for making that shift towards a digital sports media group?
I think both with the growth we've seen organically in the business and the many acquisitions we've done, there is a need for us to look internally in achieving scale with the business and being smart and consolidate things right. And on the outside, we need to utilize the strength we get as a group when we deal with partners, and thereby leverage the size we now have, where we are sort of from the legacy part of our business, the sports betting affiliation, the biggest one globally, and obviously our deals and strategic partnerships should reflect that. And internally we have the stronger group objective ongoing right now. Again, it's about doing things in a smart way and utilize synergies across the group. So that's one area which I would highlight. And then I already touched upon us learning to do new things and be great at that. So on the content side, up our game. I expect simply us as a media company with the journalistic approach, we need to be better. We need to develop there. So that's definitely a capability where we need to improve and add resources in the future.
You mentioned already the focus on scale and doing things collectively as a group. But nevertheless, it also sounds like there are some investments required. Now looking back a few months, we announced our global investment pause or freeze. Could you quickly explain how that fits together, our extensive growth strategy with then that investment pause that we announced in the end of last year?
Yeah, I think something which will be an ongoing thing is for Better Collective to have a good cost discipline, because that is what gives us maneuverability with our aspirations on M&A. It's simply extremely important that we deliver on our targets to the market, because that's a currency we have. Looking back a few months where we announced the investment freeze, it really related to us meeting the targets that we have given to the market, and fortunately we were successful with that, and it was a direct result of that. Then when it comes to investments, we will continue to invest in specific projects and areas where we do believe we have the opportunity to achieve high growth and develop the company. But overall, there will be cost discipline in terms of us making sure we have the earnings power which this business has a big potential of. That enables us to grow the business further also via M&A. So it is something where there will be a bit of pedal and brake, and that's the nature of our business. And I think historically we have been good at always meeting the targets that we have set and given to the markets, and that has given us a lot of credibility with such a track record, and that's not something we plan to sort of deteriorate from. We want to deliver on whatever we put out there.
Yeah, we have now a few years with M&A experience, and we have a strong M&A strategy. For our vision now of becoming a digital sports media group, will our M&A approach change in any way? How important is our M&A approach on this journey?
It's very important, and it now has been very important for Better Collective for, 6 years, when we started the M&A strategy in 2017. And already the position we have today, with owning some true sports media brands and assets, is very much a result of us having done such acquisitions. Action Network, HLTV, Futbin, smaller scale Soccer News, and very recently Inside Sports. We have been acquiring a lot of these brands in local markets and will continue to do so. And I think what is then the new aspiration is that we want to go up in size, and hopefully we'll be able to unlock that potential over the coming years by doing strategic acquisitions that fit this profile and will add significant size and audience to our business.
Now we covered the definition of a digital sports media group. We have talked a little bit about where we are coming from. We have talked about M&A and our investment approach. Could we zoom in a little bit on our status quo? Where are we on the journey of actually becoming a fully or truly digital sports media group?
I think we're still in the early days of that strategy. We are taking steps, and I think good steps in that direction. But having an aspiration of being the leading digital sports media group, there's still a long way to go and a lot of work to do. But I really feel we are moving in that direction, and I honestly think we have a unique opportunity to get there. We have a very solid business model. We have a very strong organization in place, and we are riding on the back of growth for many years, and have proven also by our media partnerships that we can come in and we can do things smarter and more efficient than the traditional media companies are able to do. So I think we have actually already seen elements that is hinting towards the competitive advantage that we have, and we just need to build on that and utilize that.
So we are slowly coming to an end of our little conversation here about our strategy and vision today. Now, if you had to summarize our journey, could you in brief words just highlight the key takeaways or the most important points of becoming a digital sports media group?
I think it's very important to remember this is a vision. So we are really at the 10 years plus aspirations to become the leading digital sports media group. And therefore it's also a timing thing. We need to acknowledge that this will take time, and we need to do a lot of work to get there. Then it's also very much about executing on M&A, us delivering on that part of the business. It's about expanding our capabilities, adding capabilities, also from a market perspective. There are still many markets where we need to get a foothold and presence. We need to grow and develop the existing brands that we already own, and we need to work with a stronger group initiative. We need to be smart about how we work in the company and leverage the full potential of the different organizations we've brought into Better Collective. So I think it very much relates to those parameters, and really keeping in mind that this is us eating the elephant in many bites.
Yeah, that makes a lot of sense. And now as maybe the very last question here today, and having the opportunity to sit in a room with the CEO here, I guess it's a typical CEO question. Where do you see us, Better Collective, in 10 years time? What's your vision, and where do you see us in that time scale?
Well, I'm personally extremely excited about this vision, and I fundamentally believe in the opportunity that we can actually get there. And I have some very simple, sort of personal parts which gives me that excitement. I think this vision unlocks a true 10x opportunity for Better Collective. So basically 10x on our financials, 10x on the reach and products that we have with Better Collective, and that really excites me. The other thing is that I think over this strategy period, I believe we'll become owners of truly legendary brands within sports media, and again, that is something which I find very exciting, and hopefully we'll see success in executing on that.
Great, and I think with such a visionary statement, we are closing this little conversation and Q&A session here today. So thank you very much, Jesper, for joining me here today and
Thank you.
Sharing your insights,
My pleasure.
your ideas, and the overall vision of Better Collective. So thank you very much.
Thank you, Alex.